So, hello, and a massive hello to everybody. How we doing, guys? So let's officially kick this off. 19th of April, 2015. I'm not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. And the fact that you're in here means you've read, you understand, you accept all disclosures, disclaimers, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. And before anybody asks, well, the way we'll work is we'll try and get through as many things as we can. Basically, it's first come, first serve. Just use the Q&A to ask any question you may have, any pair you want to review, and I'll just tackle them one by one. You only need to ask one. You don't have to ask more than once. I'll see it, okay? And again, there's no point asking for euro or cable because we're going to do those because we'll go through all the majors, okay? So let's get cracking and let's get rolling. So again, if anybody hasn't caught up on the news over the weekend, we've had a China RR cut. So we show, markets are gapping up a bit at the open, no big surprise. Pretty much what the doctor ordered, what you would expect. The biggest gap up is on Aussie, but fairly classical action. The market will still have to settle. Okay. Now, going into this week, it's going to be an interesting one. Keep in mind, we always still have a lot of geopolitical risk from the Middle East. We've still got a lot of risk, stuff possibly hitting the headlines on Greece. So you could get very, very choppy trade. And we do have quite a lot of data this week. So keep in mind that tonight, the market is going to have to start to deal with, all this, what happened over the weekend, the comments on the wires. We had those Draghi comments, shorting the euro is pointless, bada bing, bada boom, bada bam. We had the China, ultimately, nothing major except for the China, but, the market will just have to reprice. The focus will still be on the key levels, and we'll discuss why this is important. Keep in mind that we have the CPI out of New Zealand out, and we've got, in terms of Monday trade, we've also got Bank of Canada on the wires and the RBA on the wires. So an interesting day in terms of that. Then we'll go through on Tuesday. We've got monetary policy meetings out of the RBA, so out of Australia. We've got ZEW out of Europe, and we've got wholesale data out of CAD. So we'll still have a lot of pressure on in terms of possible data risk. And then we've got the CPIs out of Australia too. We've got those bank rate votes out of the UK. Thursday's a very busy day. We got all the PMIs, starting with the China PMIs, all the European PMIs. We got retail sales out of the UK. We got unemployment claims out of the US. And Friday, we've got IFO. We've got all those Eurogroup meetings, right, with a lot of risk there. We've got durable goods out of the US, and we've also got Bank of Canada on the wires again. So it's a very, very busy week, not only on the traditional data front, but what's going on the US, geopolitical risk, and Greece. So clearly there'll be, hey Toronto trader, how's it going? There'll still be a lot of things to deal with, right? And keep in mind that right now, the markets have opened. You've had some gaps, but they still need to settle. Spreads. Something a lot of people forget to do is they see these gaps, or because their broker is open, they say, okay, it's open, I can trade. Well, watch out, because take a good look at the spreads your broker is offering, because if you don't, a lot of time the spreads are just so wide, there's no point to even try and play something. In any case, it's much better to let things settle, wait for bigger levels, wait for more liquidity to come in, than get chopped up here trying to trade tight. Trying to trade tight with wide spreads in low liquidity is a bit of a sucker's game. You can get lucky now and again, but sooner or later, we all know how it's going to end. So try and be smart about it. Don't be in a hurry to trade. Don't be in a hurry to get in trouble. Okay, that's really the most important thing I would say. Yeah, again, the week hasn't even started really. All the platforms aren't open yet. We've got so much potential opportunity shaping up in the week. The last thing you want to do is start forcing trades in thin conditions with wide spreads, everything stacked against you, and if you're lucky, you make some pips. Big deal. Most likely you're going to end up losing money even if you read it the right way, and you're going to start on a bad note. You're going to start the week in a bad note, blaming your broker, blaming China, blaming God knows what, where ultimately it's just your fault if you're trading in these kind of conditions, right? So let's see what happens. Let's look at the charts. Let's let the charts and let's let the levels guide us, right? So Debbie. So, yeah, I think, you know, a lot of people here, we'll start with Aussie simply because a lot of people are asking about Aussie. Aussie's trading 78.30s now. Uh, our view, again, if it's the way I'm going to look at this, I'm going to look at all these charts. I am assuming you've been following me on Twitter. I'm assuming you've been following the charts I post on the blog. You know, I'm not talking about any of the weekly webinars, all that stuff. I'm talking about all the free content on the blog. So I'm just assuming you're familiar with the charts we've seen. That's why if I say we've been looking for this to happen, it's just something that I've talked about on one of the free YouTube videos or on the blog. So that's basically it. So again, on Aussie, you know, fairly, so where are we trading? We're trading 78.30. So we're trading, you know, oh, it's already open. I didn't even realize. Is it? No, it's not 78.30. So we're trading about here, right? There it is. So that's where we're trading in pre-market. We'll have to see. We'll have to see how this eventually opens. So our outlook hasn't fundamentally changed. Whether it's China, whether it's Bernanke, whether it's Paris Hilton going to Kachal, whatever, we don't care. Our outlook hasn't changed. Our outlook is very simple. Is that we've coming back down into a very, very key support, right? And the market was unable to break decisively below this level. Every time it started to pierce below this level, it couldn't attract new sellers, and it was laboring and moving right back in. Now, of course, the trend is extremely heavy, right? Nobody's going to argue with the fact that the trend is extremely heavy. So all rallies are being sold into, you know, and again, no big surprise. Our hypothesis has been since January is that we've got the 80s, 0.80 high, 0.76 20s low, and that we're going to see a lot of chopping, wheeling and dealing inside this range unless something fundamental happens, whether that's to do with Greece, whether that's to do with some rate cut out of the US, whatever, but more rate cuts out of, or whatever, out of Australia, it depends. But unless something fundamental changes, we expect a lot of sideways chop inside this range. So as far as we're concerned, the edge is to fade failures at highs and buy failures at lows, okay? Now, because of the way this is trading, following this, what we would call this fake out trade here, and repeated support here, our outlook is that we are going to go back and test the 80s, okay? So that has nothing to do with news, and that has nothing to do with anything. This is what we've been looking for, you know, since March, since this, and globally speaking, since the beginning of the year, because we said stuck inside this range, nothing really fundamental has changed. So now, whether we open up 78.30s, whether we open up 76.60s, I couldn't care less. It doesn't really change anything for me. We're still stuck inside this range. As long as these lows don't get taken out, I'm looking for 80s to print. I'm looking for this upside test. Now, because we've seen so many tests to the upside and so many failures to get traction below those lows, I would tend to favor with the opinion that, or with the outlook that 80s might break and would see a move all the way back into this 200. This is a daily chart, 100, 200. So this is a resistance to respect. There's a possibility that we actually break outside, but as long as we don't get daily closes outside the 80 or these lows, it's much to do about nothing. We're seeing a lot of choppy action. So again, no edge in mid-range, but still pivotal level. We talked about it on Twitter all day. Past week we said watch those 77.50s, right? As long as we hold below, the shorts have a chance. We start breaking above, then we'll likely get more and more traction. Now it just happens to be that we get a little Christmas present with China rate cut, but you know, the outlook is the same. Nothing has changed. Does that make sense? Any comments, any questions? So again, we'll have to see how this plays out, but again, the market's going to have to settle a little bit. And if we look at Kiwi, you know, that's very much in line with Kiwi, right? Kiwi's been holding a much nicer bid tone than Aussie's been holding a lot more bid than Aussie. We've been a lot more bullish on Kiwi than we have been on Aussie. and we've been looking for a retest back of this descending trend line and ultimately back into the 80-30s. Okay, so since the beginning, we had this very aggressive day. You can go back. We discussed the intraday dynamics of this move in one of the videos in a lot of detail. And basically we said, you know, this is the line of the sand. Unless this breaks to the downside, we're looking for this to really try and rotate higher. Now it tried to press higher, and it just got smacked down very, very aggressively. You know, a lot of people talking about the fact that maybe the RBNZ is selling the 76s. I have no idea. The only thing I know is that indeed it looks like there's a lot of resistance here. We came back down, you know, we were trailing some longs here, got stopped out on all the trails. Bam, same kind of action. Very aggressive buyers here at these lows. Another chance to get long with stops below these lows, just playing on the fact that this base is solid for a rotation back up, and that played out quite nicely. We broke out here. You know, once we got break here, we started to say, well, maybe this can get a lot of traction. Now we got this negative close here, and a lot of people were shorting this. Now, I was looking at this one with mixed feelings, because if this one would have closed, if we would have had a negative close below the 7600, so we had this daily close negative back below, so previous support acting resistance down here, I would have been very aggressively short on this failure. But the fact that it failed, that it closed, but it still closed above the 7600, I wasn't too hot on the short. You know, we came back down. This is a 50 back of this move higher, got bought again. So you see it's very sloppy, but it's holding a lot of, you know, it still looks like it's holding pretty bid, and the key levels are holding pretty solid. Bam, we broke back above here. As we said last week, you know, those 76s have been sold hard a lot of times, right? So if you see price approaching those 76s, and what you would expect is the market to try and sell them hard again, and you don't see those sellers show up, it means most likely those sellers are just not there anymore. If they're there, they'll be waiting higher, right? So bam, very explosive move all the way into that descending trend line. Very nice. You know, if you're looking for that explosive trade on Friday, you know, you don't want to be a pig. You'd be flat into that move, just looking to get back long on any retracement if you still like the action. So what I would say on Kiwi going into the week, what's Kiwi trade? Kiwi's trading at 77s pretty much on the dot right here. Okay, so about 13 pips higher. What I would say here is watch these 76s going into the week, right? It might take a bit to settle, but as long as we keep on closing on a daily basis back above those 76s, I still think we've got room to move to the upside. We've still got room to see positive traction to the upside. If we start to close back below the 76s, then I would expect these lows to get tested very quickly, heavy tone to come right back into the pair, okay? Any comments, any questions on Kiwi? Okay. Yeah, so what's happening on Euro? Well, Euro, where should we start? Okay, so this is a chart everybody on the blog should be familiar with. Basically, very aggressive move down here into the 150. You know, everybody's starting to call about parity. Everybody getting excited like sharks smelling blood. We slightly pierced that 105, and what we said is cautious on that break. A failure to hold below that 105, and it'd be high time to see some kind of a bounce, also because we're really into an important structural level here, and we caught a very nice bid off this failure to get traction below the 105. So right here, it's just holding into support. Now, the only thing I would say is that, as always, nobody has a crystal ball, right? The only thing we know is that price can do three things, right? Price can go up, price can go down, and price can go sideways, okay? So those are three things that can happen. The only thing I'm saying is, you know, just try and not be a pig in general. because what we like to do is we like to focus on what happens the majority of the time, not what happens in rare exceptions, right? So if you look at this aggressive move, what we got, 1 2 3 4 5 6 7 8 9 10, pretty much 10 candles in a row, negative candles in a row, very aggressive move, no retracement at all. And we know that healthy markets tends to retrace. We like to see two-sided action. So when you see this kind of move and we start to base, the only thing I'm interested in is either being sidelined or playing for a bounce. There's no way I'm going to play for the 12th or 13th or 14th negative candle in a row here. Look back on your chart and look at the magnitude of this move and see how many times in the past 10, 20 years you've seen this kind of move, right? You'll be able to count it in 1 or 2 fingers, right? So the point is, I'm not playing for continuation on something that happens, once every 10 years or something like that. We look for healthy markets. Now, despite the fact that there may be structural issues in the market, there might be things going on. That's why there's always the option of being sidelined if you don't like. But the way we look at markets, we like to look at healthy markets, healthy retracements. We do not get excited looking for the 15th, 13th, 12th, 13th, or 14th monthly candle in a row in one direction with no retracement. Whether that's long or short, it doesn't matter. The same logic applies. So here, in a healthy market, we would expect to see some kind of a bounce or at least some kind of sideways action. Does that make sense? Hey, James, how's it going? No, we haven't done gold yet. Anyways, the session's recorded, so everything will be up on YouTube, but we haven't done gold yet. So does that make sense? Does anybody have any comments, any questions on this one on Euro here? Okay, so on a daily, what we were looking at, right, we've been looking at the action here, and what we've said is basically we've got a lot of chop, right? And this whole move on this break from these 110.90s, right? So this breakdown into those lows at those 0480s, and remember we got the spike high on the FOMC, right? Here, what we said is, bam, this is a chop range. The breakdown, spike high on FOMC that couldn't reach it, and then these lows that are defended. So this whole area is kind of like that area on the Aussie, right? It's a wide zone, but much to do about nothing as long as we hold inside this range, right? So you have to keep in mind, so guys who are trading, you remember on that FOMC, we put in the second biggest trading range in Euro's history, okay? So what you have to keep in mind, and again, I did a video on that, so if you go back on the YouTube channel, it's just the weekly outlook after that FOMC meeting, we talk about it, or the one after that. So basically what it means is that when you've had a daily range which is so aggressive and so extreme, there is very little reason, in our opinion, for the market to aggressively break outside of that range unless something fundamental happens that the market has to reprice. So as far as we're concerned, unless anything fundamental happened, it would be healthy to see a bounce. But if not, this is a chop range. So we favor getting short at failures at the high range, getting long at failures at the low range, getting short at failures. And we've got this 0730s, which we talked about, which was a pivotal level. So that would mean is if you're short at the high range, you see it coming back into mid-range pivotal and it can't break below, it's time to flatten up or reverse. You're short, you see it go knife through butter here, no need to flatten up. You could be aggressive and look for those lows to get tested again, okay? So right here, the way we look at the chart, as long as we keep on getting daily closes above the 0730s, we expect this upside to get tested again. Because of the pattern, the more one side gets tested, the weaker it will become, and the higher the possibility that we do get a breakout. It might be on Greek news, we don't know what, but bottom line, the levels are the levels, the range is the range. We'll have to see what happens, okay? Does that make sense? So it's just a question of being patient, seeing what's happening here, how we trade, but pretty much, you know, in line. Yeah, Euro's trading 0220s now, right? So pretty much unchanged, right? Pretty much unchanged. But fairly classical action, you know, very tradable action. Even though we've been in choppy ranges, you know, the ranges have been very tradable, right? So going into the week, I'd still keep an eye on those 0730s, right? And as long as we hold above those 0730s, we expect this to try and make its way back into the 10s, right? Cable, what's going on cable? So cable, if you haven't done so, I would really encourage you to look at the video we did last Sunday it's on the YouTube channel on cable explaining it, and you know, it played out pretty well. And let me just run through it quickly. So what's going on cable? Well, okay, so let me get rid of this because we got some trades here on this chart. So basically, oops, I didn't want to do that, but so what we said on cable is we said, first of all, we have this FOMC range similar to Euro that you need to respect. And second of all, in case anybody's forgotten, we've got election risk, right? So our outlook is that price will likely stay very choppy throughout this election period. And because of the way we look at the market, because of the way we looked at it on Aussie, we discussed it on Euro, we would expect price to stay inside this range until it's clear what's either some big catalyst comes out or the election is over. So what we said last Sunday before the open, we said most likely price is going to try and test the downside, take out fortune seekers, which tried to trade with very tight stops here. But look at the action on Monday. If this holds below 46.30s, this is likely going to get very heavy. If Monday does not close back below this level, we're right back on range. We're right back in range. We're back in that election risk. We're back inside that FOMC risk. Don't get excited. Don't be a pig. Most likely outlook, we holds back above, it's going to reverse all the way right back into this zone. Range inside a range. 50, 48, 62.30s, 51.60s. Bam, all the way back up. Where did it get sold? In the middle of nowhere? No. The range inside the range is what's getting protected. The 150 is getting protected. So going into the week, no change. You can look at that video again. Intra-week, daily closes below the 150. We could see this try to make its way back into the 148s. Daily closes above the 150. We'd expect this to try and take a stab at the 151.60s. Very classical action. Pretty classical, you know, and you see how aggressive the move here, especially when the market gets caught off guard, you know, every day, higher low, higher low, higher low, higher high, higher high, higher high, higher high on the daily. Very hard to argue with the chart. If you stay stubbornly short after this kind of action, you know, don't think you're really paying attention to the chart, okay? Now, structurally, no big change because we're still inside that range. But, you know, the action last week was pretty picture perfect, right? Okay. Any comments, any questions on cable? Okay, I'm going to have to, I got a cough drop in my mouth. So if it sounds weird, I'm sorry, but I've got a bit of a sore throat, but I wasn't going to chicken out and not do the webinar. That would just be wimpy. So you might have to hear me chew on a cough drop. But apart from that, everything should be okay. So, yeah, the other chart that everybody's asking about is gold, right? So the guy's asking about what we call, in a loving and family way, the funny pairs. So the more exotic pairs. I'll try and cover them towards the end of the session. But if you're new in these webinars and following me, I tend to like to focus on the majors, on the pairs that most people will focus on. Also because those are the pairs you will have more edge on. Okay, so unless you're trying to play some big structural plays, you're trying to take advantage of some carry, God knows what. As a junior trader or as a newer trader, keep in mind that you've got a lot more edge trading the currencies that have much higher liquidity and that have much tighter spreads. Okay, they'll tend to behave a lot more technically. You tend to have a lot more edge. You'll tend to have a lot better fills. Also, if you're in the idea of something like the Darwin X project we're talking about, where you're looking to manage investors' money, so you're trying to run bigger positions, the bigger your positions, the more important it's going to be to trade pairs that are more liquid with better spreads, better trading conditions overall. Okay, so what's happening on gold? On gold, absolutely nothing. So by the way, shout out to Miss Gold if she's in the webinar. I haven't seen her in the webinar, but basically not a lot's going on. Our outlook hasn't changed, so it's the same thing about unless something fundamental changes. We are looking for a healthy correction in equities. That does not mean we are itching to short. That does not mean we are dying to get short, and that doesn't mean that we're blindly short getting killed. Okay, it means that we're very tactically looking for short opportunities, understanding that if it fails big, it might have to fail from a higher level, but this would fall inside our bigger picture look that we think gold is going to correct higher. So we think that structurally we're bullish gold. We've been bullish gold since the first test of the 1200s. We've been even more bullish gold since the failure to hold below the 1150s. Okay, so right here we are still stuck inside a range. The range is 1250, 1200, 1150. For us to get what we would call a range shift, so basically move to 12, 1150, 1100, we need to get an aggressive close below those lows. For us to get a range shift to the upside, we would need to get an aggressive close above the 1250 mark, right? So right here, we're still stuck inside this range. So what we would expect is for price to continue to stay very choppy inside this area until equities decide what to do. We would still suspect that gold will hold a bid tone no matter how aggressively higher equities press, because it will probably be on less and less volume and people will probably have some kind of hedge, but to think we'll still have an underlying bid tone in gold. So we expect a lot of choppy action around the 1200, but we're still looking for this to slowly try to rotate back 12 to 1250 and higher up. Does that make sense? Any comments? Any questions? It's not a cold, Debbie. I'm just talking too much. Okay. Yeah, that's another one. We had, I can't remember, I think it was even the last time we had a live webinar. Everybody was saying that I was stubborn on the short side here. It finally played out here. This outlook is in line both with also our outlook on crude, right? So basically we've been playing this range, and again, as long as it's inside this range, is just range plays, right? Getting short, failures at highs, getting long, failures at lows, just playing the range if you're playing the range. If you're playing a swing position, this has been a short all the way with the build long on crude, right? And basically, the catalyst for the breakout of the range was crude breaking out of the range most likely, and also the data. But basically here, what's happened is we've broken back down. So watch out how we behave here. We got a lot of cat data coming out this week, right? So what you would expect in pure technical fashion, right, is that if this trend, because it's a very strong trend, is going to trade very aggressively higher, price will most likely catch a very aggressive bid here, and it will go knife through butter and try to move all the way back to those highs straight away in a very aggressive fashion, right? Now, what the shorts will want to do is they'll want to protect this break. So most likely the shorts will be looking to sell any kind of rally back into the shaded area. looking for this moving average to start to 50 to move back down and give some protection, and play the downside and looking for this to correct more and correct right back down into that 200. Right? So again, we've been talking about this possible correction all the way to 116 since January, right? So there's no big change for us in the way we're looking at this. What I would say in terms of intra-week is that this could be very, very choppy. Broadly speaking, if we start to get daily closes below this 121.90, expect this to trade very, very heavy. For this to start getting a bit more of a bullish tone, I would expect to see it get a daily close back above this 124.20s, right? So this whole area here could be very, very choppy, and we'll just have to see. It'll most likely be data dependent, it'll be depending on how crude trades and so on, right? I can't read that one out. That's X-rated. Okay. Oh, God. Any comments, any questions on CAD? Yeah, sure. We'll look at crude straight away. Yeah, that's an interesting question. Question is on, do I feel that the market have been easy or hard to trade this year so far? Now, I think the markets have been extremely choppy, and what we've seen is that I don't think the markets have been particularly hard this year as or harder than usual, right? Basically, the biggest problem, I think, is people are finding it hard because, as always, maybe the context is a bit tricky for some people to grasp, right? And what I mean by that is, on one side, the fact that pretty much, it's all one chart, it's all one trade. So really the market now, it has been focused on and on, off and on Greece. But, broadly speaking, the big debate here is, what's going to happen with US rates, right? So as long as we keep on getting this wheeling and dealing with US rates, so unless we get a clear picture on what the next move is, the market's pretty much priced in, right? The fact the US might be raising, etc., etc. So unless we get a very big catalyst, so that would mean, absolute clarity that there's no rate hike in the States until 2016, absolute clarity that Greece is going to stay in the euro, absolute clarity that Greece is going to leave the euro, absolute clarity that, Saudi Arabia is going to do something funky on oil, whatever, right? There's very little reason for the market to break outside of these bigger ranges that have been set, which are very big. So of course that changes the nature of things. It means that it's a market where you have to be comfortable understanding these ranges and comfortable trading inside these ranges, and not necessarily expecting the breakout of aggressive breakouts and not going for the big kills. It's more of a market where you have to be very nimble. Does that make sense? On top of that, you have to add a very big factor, is that we've had the SMB debacle, fiasco, fireworks, whatever you want to call it. So what's happened is that that's left a lot of people licking their wounds, right? Not only retail traders, but a lot of bigger players. A lot of big brokers have had to shut down business, etc., etc., etc. So what that means is that, we've seen a lot less liquidity in the market, right? A lot of the liquidity providers are just not as comfortable with a tight spread set. So you're seeing a lot more choppy action, a lot more of velocity of move inside range, simply because there's a lot less liquidity. Add to that what's going on in China with the Chinese stock market. Add to that the way the US stocks are trading. It just means that it's a tricky environment. But it's even harder if you continue to try and trade it one specific way, or the way you've always traded. You have to be able to adapt, right? And what we always say, the tricky thing is, because so many newer traders, so many retail traders, they tend to not manage to stick around for a long time. The people that stick around is the ones that tend to get lucky on a specific kind of move or a market that behaves in a specific kind of way. Then they think, right, they got it all sussed out. Then the market changes and then they may no longer be there. Then you get fresh blood and they all of a sudden adapt to that kind of market, but as soon as that market changes, bam, they're out. So you always have some people who seem to say, oh, it's awesome, it's awesome. It's not, it's tricky. It's a tricky market. By far, it's harder than, the market we had, post, 208, 209, much easier to trade, much more directional in terms of certain moves on Forex. It's choppy, but it is what it is. But I don't think it's crazy market. It's impossible to trade. I don't think it's easy. I just think it's the market. The market, you always have to deal the hand you've been dealt. You have to deal with it, right? But you adapt, size, trades, etc. Anyways, I don't want to ramble too much, but I thought that was an interesting question. So yeah. I lost my train of thought, what chart we were supposed to be looking at, because I started rambling. But again, USD CHF, Euro CHF, I think there's absolutely no edge trying to trade those, right? As far as I'm concerned, they're just stuck. They're stuck pretty much. I don't even want to review them. Sorry, Peter, because I just don't want people to get in trouble, right? I don't think there's a lot of edge. So I think there's far more interesting things to look at, right? Yeah, I mean, another interesting, yeah, sorry, that's what we were supposed to do. 50's getting sidetracked. We're supposed to look at crude. So what's going on crude? So crude, we've had a very, very nice breakout, right? And what we've been discussing, and again, we've been talking about this since last year, right? We expected on that final break, right? We expected price to base inside the 55-45 range. And what we've been saying is keep in mind, you cannot expect price to move down so aggressively, even if you're looking to build a long, to come down from the 107s into here, base and shoot back out to 7. No matter how much conviction you've got, that 60, 70 is a much fairer price. So what we said since last year, we said, okay, as long as we don't trade aggressively back below that 145, we expect price to try and find a base inside this 55.45. We expect it to be very choppy. And the way crude tends to trade, the way we would expect this to form a base is we would expect it to take months, possibly quarters, to base inside this range. So as long as it's inside the range, if you want to trade aggressively inside the range, you engage at extremes, playing for price staying inside the range, reverting to that midpoint for that 50, and there were opportunities. I don't like personally to trade crude intraday. I prefer to be positioned on swing moves. And right here, we're breaking back outside. So far it's looking very, very good. Yeah, you remember, what we said is we don't know anything, but we think it's going to base here. And in any case, right, at 45, I'd expect to see 65 before we see 25, right? That's just a bet, right? But anyway, so right here we're breaking outside. So what I'd watch on crude is keep in mind this could be extremely choppy still. I mean, just purely based on the technicals, very nice would be to see a little push back into the 55s and then a bounce off the 55s to rip back higher. Now, I doubt it's going to be as easy and as nice as that. We'll probably see a lot of choppy action. But right here, what I would say is that you need to respect these highs here, right? So we'll likely see a lot of choppy action around these highs, and which are coming in, where are they coming in? They're coming in around 59.20s, and I'd expect that to be the bull bear line for the week. So bullish above, bearish below. So that's pretty much where we what we're looking at on crude in terms of charts and levels. Does that make sense? Any comments, any questions? Yeah, it's a lot of a lot of wheeling and dealing. I mean, and on yen, not a lot to do. Still held very, very, you know, guys, remember we're uber bull on yen. And then right here, there hasn't been an awful lot to do. The only thing we said is, you know, keep a good eye here on this failure. We had a very nice chance to get short here, right? Then another very nice chance to get short here. But it's still stuck inside the range, right? Still stuck inside this range. Now, if you look at it from a bigger picture view, this whole area is very, very important. And let me try and find the chart. I'm going blind. For the monthly, you know, that whole 120 is really, really important. You know, if we start, this is a key point, because at this point we could start to see a healthy correction back down. You know, it could even be back into the, you know, the 114s, 110s, 111s, right? Or if we get a move back above those 120s, then we could get that next big aggressive move above the 120 to try and rip back towards the 130s. Now, if I'm not mistaken, we've got another BOJ meeting towards the end of the month. And if anybody knows what the date is, just let me know, because I can't remember, but it's towards the end of the month. I guess 20-something, is it end of next week or something like that? But anyway, so what I would expect is, unless we get some funky jawboning or news out of the BOJ, I would expect a lot of people, no matter what happens on Euro, no matter what happens across the board, to try and get long any dips here. Kind of buying a lottery ticket that the BOJ is going to do some more and we'll see this rip back up. And, you know, maybe it's just a trade, buy the rumor, sell the news. But again, I think we could get a lot of volatility here. And I think to a certain extent, it could be a bit confusing based on what happens across the board on some other pairs or some other indexes, simply because there might be so many people trying to position ahead of that BOJ. Make sense? Any comments, any questions? Okay. Rock and roll, guys. Listen, guys, let's cut it off there. We're doing for 43 minutes. It's good time. Upload speed won't be, we should get that on YouTube. If not, it's going to be way too long. Again, guys, thanks a lot for hanging around. Hope everybody has an awesome weekend. Keep in mind, you want to be cautious here on the open tonight. Let's see what happens, right? Have an awesome one, guys. Take care, and thanks for flying with 50, okay? Have an awesome one, guys. Bye-bye.